Okay, we're going to take this video to explain how to avoid whipsaws by using the QuickView, because there are certain setups in QuickView that will give you a heads up to let you know that this is a very potential day for having a whipsaw. If you don't know what a whipsaw is, it's a situation where you get the previous day's high by this red line here and the previous day's low within a narrow range day. And many traders will say, well, once it breaks out past this high, I'm going long if it gets over there, and I'll set my stop below the previous day's low. And what happens is they get whipsawed. Sometimes this works and makes decent money, but certain scenarios arise that QuickView can find for you to let you know that it's potentially dangerous to try this method. And I've tried doing this video quite a few times, but I can't keep the time limit because I'm going back and forth, and it got very time consuming. So what I did, I created this summary. Let me pull it up. There it is. Here's the summary. It's a summary that starts back from September of 2009 and it goes to March 31st of 2010, roughly about 6 or 7 months. And in that course of those months, you have some 26 or so scenarios with these narrow ranges. We use the Aussie. Okay, could have used any of the others, but here we use the Aussie. And when they met the conditions, like here, yes, this is what the end result for the profit loss was. And here's the total profit over that time period of 260 pips that we had gained using this setup versus the old method that most traders use with the stops entries that they would take was 36 pips gained over that time period using those same days where this setup occurs. So, which would you rather have? 36 pip gain over this period of time with these setups, or a 260 pip gain? I think you know, I already know what the answer is. So, now let's take a look at the setups. Basically, what we want to do in these setups is we want to find narrow range days, but here are the rules. They can't be associated with a squeeze. They cannot be a narrow range and a squeeze going on at the same time. The other thing is that we can't have a narrow range after another narrow range day. Now, for example, this narrow range day would be okay because there was not a narrow range day before it. So we avoid narrow ranges that are clustered with others. This one would be okay. We would have tried to do that one, but here, no, 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 yes, no. Oh, no, not yes, because there's a squeeze next to it, okay? The other criteria is that we like to see some type of stems on the candles of the narrow range days that occurred. And we also like for them to be at some swing high or some swing low. Now, here are the rules. This is how it works. The first move is usually the wrong move when you have this setup. That's the rule. That's how we trade it, with the mentality that the first move is the wrong move, and the earlier it makes that first move, the more confident we can determine that that truly is the wrong move. For example, here we see a whipsaw scenario. It dropped below the previous day's low, dropped below it again. Never got past the previous day's high, dropped below it again, and this time filled our QuickView levels, which we were waiting for to go long because the first move was the wrong move. This is the second one. This is breaking the high of the previous day, and this is breaking the low of the previous day. It did not break the high until it broke the low. So this is what we do. I've explained the setup. Now here's the method. Look for the first move to be the wrong move. Find your QuickView levels that are below or above, okay, below the previous day's low, the QuickView levels, or the QuickView levels above the previous day's high. Now here we would not short this because it's not the wrong move, because this is after we've made the first move. The first move is the wrong move. We just simply fill our position, go long, and let it ride. Okay, so that's how that works. We put our QuickView levels give us the support. If the first move is to the downside, breaking the previous day's low, we will go long from a support level of QuickView, as you can see here. And let me get rid of this. We can start another one. Here, once again, same scenario. The first move is the wrong move. As you can see, broke the low, went back to the upside. Now here is a situation where our QuickView support level did not get filled, because we would not fill this here because it hasn't broken the previous day's low yet. We want our target to make entry underneath the first support level that we can find underneath that previous day's low. Okay. However, here, even though we counted a 0 in our summary report that we had there, that's not the one. In this whipsaw, this day we given it a 0 because it didn't fill. But actually, you still could have gotten an entry to go long here, because the after it bounced off of that support, it went and it made a close above the barrier here. It closed above it, and one of our scalping techniques is based on momentum. This momentum going up would have created a scenario to scalp this and say, alright, we've got to close above the barrier, we've got a void that we've entered into. This is a big void here. There's no resistance anywhere. Let's take the long at the barrier. When it comes back, looking for it to come back, set our stop underneath the low down here that I covered up with my drawing. And take our targets near this resistance area here, or both. You know, take a piece off here, a piece off there if you're doing multiple contracts. So you still could have gained some pips between here and here, even though our summary reports 0. So that's how we avoid the whipsaw with the QuickView. I'll show you one last, well, maybe two. Here it is again, the same setup. There's your high and by the red line here, and the low here. First move, wrong move. Look how early this is. Okay, take the resistance from the QuickView level and short, and look how nicely that just works its way down. Okay, you get my drift, I hope. Get the setup in QuickView, follow the rules, and you get a summary with a nice gain versus a small gain, and much less frustration as well. Whipsaws are very frustrating for traders. It's extremely frustrating, but they can be avoided if you use the QuickView tool from forexuniversity.net.